Hi trader, welcome to Khajane Trade and Train. In this educational video, we are learning intraday trading strategies of gap up or a gap down. In this video, we are learning how to trade gaps, also called as gap trading. In today's market scenario, gap up and gap down are very common. Flat opening is very rare. In this video, we are learning in each and every situation how to trade graphs. This is the practical experience of a very profitable traders we are sharing in this video. Before going to gap up trading, how to trade the gaps, we are conducting a 2 days stock market training programs. It is advanced to basics to advanced training workshop. In this workshop, we are learning lot of basic things to advanced like trends, chart trading, candlesticks, Fibonacci, moving average, MACD, RSI, support and resistance, intraday trade setup, ORB, OHL, PRB. So many things we are learning. Also, we are learning simple and powerful trading strategies of Oliver Velez, and also intraday inside bar strategies. It is a very affordable fee. We are calling this one as an income generation and wealth creation. Please call on 96866 Now we will go for what is gap trading. Before going to the gap trading, we will learn trends in the market. What are the kinds of trends in the market? As you know, there are three types of trends. One is the uptrend, and another is the downtrend, and one more is the sideways trend. We have only three: uptrend, downtrend, and sideways. Suppose if you want to represent this uptrend, we will see as a bullish candle. This bullish candle is opened here and closing here. Always in the bullish candle, the closing price is higher than the opening price. Suppose if you represent this one in a single candle, this is a bearish day, this is the downtrend. We will represent like this red bar, where the opening price is on the higher side and the closing price on the lower side. The closing is lower than the opening price. This is a bearish market. Then if you come to the sideways market, the candle will looks like this big upper wick and big lower wick and a small real body. So one is this green candle represents the bullish market, where the bulls are very strong. We are now talking about who is strong and who is weak. Here bulls are very strong, bulls are in the market. In this market, bears are very strong, bears wins the market. In this sideways market, no one is wins the market. Both are equally good. No strengths in the market. This sideways market looks like this, and it will run upside, downside, upside, downside, and close somewhere here. This is the sideways market. In this graph, we have seen uptrend, downtrend, and sideways market. Today's entire session depends upon the who is strong and who is weak, and where the market is in the sideways market. Now we will see one by one scenario how these gaps will be traded, and what is the practical utility, and what is the psychology of the market. All these things we will see. See, this is the first frame. I am explaining all these candles. Then we will go forward. I will not tell what is this candle and all those things. This is, if you see, the market is opened here. Bulls took the strength of the market. Bulls, buy, bulls, bulls come, and where the market is closed, this is the opening price and this is the closing price. PD is previous day bullish candle. This is today, previous day, not today's, previous day's bullish candle. This trend, we will say it is a trending day because opened here and moved up to here, maybe around 600 points, 1 to 1.5 to 2% has been moved. This is a good trending day. Bulls are winners. In this scenario, who is the winner? Bull is the winner. This represents a bullish candle. Now, as soon as market opens here, this is buy is happened. All these are buyers. They have bought the market here. Market become strong. It went up to here and closed here. This is the closing price. This is the opening price. This is the bullish candle. Now come to today's market scenario. Let us say today market is opened near to the closing of previous day. One more thing I have not told, what exactly is the gap up or gap down. Suppose this price opened above the closing price of the previous day, then we will call this one as a gap up. Suppose this candle is opened below the closing price of previous day, we call this one as a gap down. Once again, this is the closing price, this is the closing price. Suppose market opens here above the closing price, we call this one as a gap up. Suppose the next day market is closed here, this is the closing price of the previous day, opened here, then this one is called as a gap down situation. Stop. Market closed here, this is the closing price of the previous day. Next day market opened here, this is the current day's opening price. This gap is called as a gap up. Previous day market closed here, today market is opened here. There is a gap between previous day close and today's opening. This price difference is called gap up. Now we will come to the scenario of gap down. This is the closing price of previous day. This is the closing price of the previous day. Closing price of the previous day. This is opening price of next day. This is the next day. Candles opened here. There is a gap between these two candles. This is opened below the previous day candle or previous day. This is called as gap down. This is gap up and this is gap. I hope you have understood what is gap up. and what is a gap down. Traders, so far if you have not subscribed to my channel, please subscribe. If you like this content, please press the like button. Now we will go to one by one scenario. This is the previous bullish candle, previous day bullish candle. This is the very strong trending day. Here bulls are winners. This represents all bulls are bought the price and made the market to went up. Now next day what happened? The market is opened almost near to the closing price or some little gap, no? You can say here market opened here, next day market opened here. This is the previous day trending day, this is the bullish candle, and next day market opened here. This opening we will call this one as a flat opening, almost closed or little some percentage below this one market is opened. Now what is the traders view for this current day, that is how market will move up or move down. This is our concern for the today's market trading, particularly for the intraday. Now if you see today's opening is here, it is in favor of the previous day candle. That means what? It is this opening is in favor of the previous day candle. Previous day candles is here. This is the bullish candle. It is in favor of the previous day means what? See, he bought here. This is the price. Maybe this price he bought. This person bought the stocks or indexes here. Now you tell me whether this buyer after next day opening is he in profit or not? Definitely he is in profit because he bought it here, and if you want to sell, he can sell and he can book his profit. Tell me this buyer whether he is in profit or not. Yes, definitely he is in profit. He is in profit. He is in profit. He is in profit. He is also in profit. He is also in profit. Maybe he is, because he bought it here, somewhere here, he will be cost to cost or little loss also. Apart from this, all other buyers are in profitable. That is the meaning. It is in favor of the previous day candle, where the previous day candle is bullish, and also today's opening is in favor of the previous day. All buyers are safe. All buyers are making profit. All buyers are safe. Market will continue in the same direction. This is what we require for today's trading. Market will continue in the same direction of the previous candle or previous trend. What is the previous trend? It is a bullish trend, because market is opened flat above closing to or so little bit below. It is in favor of the previous day, so market will move in the upside only. This is what is required for today's direction view. How to take today's direction? We should be in the buy side only. We should not come to sell side, because this situation gives us a direction. We should be in the bulls side only. We have to buy in this market. We should not short in this market. We have to move with the market. Market will continue in the same direction. Understood? Want to explain once again? This is the previous day candle, bullish candle. It is a trending candle. All bulls are winners. These are all the buyers. It is in favor of the previous day trend. This is opened flat. Next day market will continue in the same uptrend direction. This is one scenario. Shall we go for next? Okay. Now here the situation is little bit change. Previous day is the bullish candle. It's a trending day. Bulls are wins. These are all the buyers. Now we will see the psychology of these buyers. He is profitable. 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 He is also little profitable. He is cost to cost. He is incurred a loss because he bought here at this price. Next day is gap down is there, small gap down is there, mostly about a 30% gap down is there. These late buyers, these are all called the late buyers. These are all the early buyers. As soon as the previous day opened, they bought the stocks. So they are the early buyers. These are all the late buyers. What happened? Late buyers are in small loss. These buyers, they are in the small loss. Wait for breakout trade because these one or two buyers, they will wait whether market will go up or if it is goes down. Suppose again if the market comes down, they are in the big loss. Now it is a small loss. Again if the market comes down, so these two buyers will hold or they will wait for breakout and trade in buy side only. What is that meaning? We have to go to the 15 minutes candle, see the 15 minutes candles. If it is breaks on the upside, definitely it will breaks on the upside because it is in favor of the market. Previous day market only. One or two buyers are cost to cost or incur a small loss. Definitely it will take gap uptrend, but we have to wait for the confirmation of the 15 minutes candle to break out. 15 minutes after 15 minutes candles breaks out, we have to take on upside trade in buy side only. See, if you look at this chart of Nifty somewhere in 31120, this is the example I got it. This is the previous candle. This is the next day candle. Opened little below the previous day candle. See how the market has rallied. If you are an intraday trader, it's a good rally for the intraday. This is the one more situation. Now we will go to next situation. This could be the next situation. Same. Now I am talking only about the trending day, bullish day. Previous candle is green. All these situations we are talking to only bullish situation. So previous day bullish candle, it's a trending day. Bulls are the winners. The next day situation is, next day market is opened near to opening price of previous candle. Previous candle opening price here. This is opened. This is the closing price of the previous day. This is the big gap down. This is the big gap down. Previous day buyers are in loss. Now we will see previous day is the late buyer. He is in loss because market price is low now. Suppose if you had bought it here at say 100 rupees, now the gap down is there 80 rupees. He bought at 100. If you want to sell, he has to sell at 80 rupees. He is in the big loss. He is also lost. He is also lost. He is also lost. He is also lost. He is in also lost. He is also lost. He may be cost to cost, and he will be, this candidate will be a little bit profit. Previous day buyers are in loss. In general, all these buyers are in loss because there is a big gap down opening. They will be in panic. Definitely, when you have bought it here and make the market the next day gap down, definitely this buyer will be in the panic. Early buyers are cost to cost. These early buyers may be cost to cost or a small loss. They may hold sometimes and wait the market to go up. A small down move will made everyone in loss. Suppose market gives a small down here, market moves like this, a small down here, say market will come up to here. Now imagine the situations of all these previous day buyers. All these previous day buyers are in loss now. What they will do, a small down move will make everyone in loss and start selling. They will start the profit booking. This is loss booking. When they start loss booking, what happens? Market, they bought it here and they are started selling at this price. They will sell, and also new sellers also will join. When the market, if you see the market, it will coming down, so some new sellers also will join, make the market will move downside. Start selling, new sellers also join, wait for breakdown and trade in sell side only. Now after this breakdown, 15 minutes candles breakdown, after 15 minutes wait for the 15 minutes candles to break down, then you start selling only in the sell side only. In this scenario situation, next day market will go down only. See the situation now. Market will go down only. Market will go down clearly and make some serious move. We'll go to next scenario. See this scenario. Same bullish candle, trending day, all are buyers, but there is a, this is the closing price the previous day. Next day there is a gap down, big gap down below this below this entire market, below this entire trend market has gap down. What happened for all these previous day buyers? He is in loss, he will also loss, he is also loss, he is also loss. All these previous buyers are in loss. Imagine that he bought it here, next day gap down opened, he is in loss, he is in loss. All previous buyers are in loss. They will be in panic. Definitely, when you bought it here and market is down here, definitely he is in panic, he is in panic, he is in panic, he is in panic. Every one of the previous day buyers are in the panic. So panic, selling pressure will come. New sellers also will be added. Big down move will be seen. This big down move is very fast moving You need not wait for the 15 minutes candle to break down. Trend in sell and sideway sell side only. Trade in sell side only. We have to trade in sell side only. 1 second. Previous day is the trending day, bullish day. All are sitting on the buyer side. Next day, big gap down is happened. All previous day sellers are in panic. They wanted to book the loss up to last candidate. They wanted to book the loss. So a big down move will happen. We have to trade in sell side only. Sell side only. This is called a direct selling. Understood? Shall we go to the next? This is all when we candle opened in the bullish, the previous day candle is the bullish candle. We have seen when the candle is previous day candle is bullish, and how the market will behave in different scenarios. This we have completed. Now we will go this situation. Yes. Same bullish candle, buyers, situation change is there is a, this is the previous day closing, there is a gap up scenario, small gap up scenario. You can see a gap up scenario here. Market is, this is the closing price, market is opened here. Now tell me the position of, what is the position of all these buyers? What is the position of all these buyers? Whether he is in profit or not. He bought it here, market, next time market gap up, he is in profit. Whatever he price he bought, now it is more than that. He is in the early buyer and late buyer also is in profit. All previous buyers are in profit. They will start profit booking. Definitely, suppose he is in profit. He wanted to book the 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 profit. When he has got the buy, when he wanted to book the profit, what he has to do? He has to sell. So market will closely come down. Market will closely come down. When they start booking their profit, here they have bought. Now they wanted to sell. When they book the sell transaction, so market will start coming down, coming down, coming down, coming down, coming down, coming down. As and when these buyers start booking, so sell will come, sell will come, sell will come. Up to what? Last buyers may wait. Direct selling will come to the target up to previous day high. This is the previous day high. We have to wait. We have to sell up to here. Up to here we have to sell. Majority of them, they will start booking the profit. Then market will take again, because all are happy buyers only. Market will again move upside. Here we have got two opportunities. One is selling opportunities and another is the buying opportunity. In this market, then here market will take the support. We can trade in sell and also in buy mode. We can sell in the down and also we can buy in the uptrend. This is the situation. What is the situation? Previous day is the trending day, bullish candle. Market is gapped up, big gapped up. All buyers are very happy, their prices are this way. They will start booking the, some of the buyers, they start the booking, market will come down again because it's in the favor of the buyers only, market will go up. Please check and back test the charts, practice yourselves, convince yourselves, and trade yourself, because all these things I am sharing with the knowledge I gained from a very good trader. Next situation is, now this a bullish candle previous day, all scenarios, almost all scenarios we have seen. Now suppose what happens if it is a bearish candle instead of previous day bullish candle? What happens in the next day? Suppose there is a bearish candle in the market. These situations we will study now. Understand this candle behavior. This is the trending day. This is the trending day. This is the down trending day. Market is coming down. Market, when the candle is red, where is the opening? This is the opening. Market will come down. This is the closing. When red candles forms, this is the opening and this is the closing price. The closing price is below the opening price. The closing price is below the opening price. Previous day is a bearish candle. Now we are concentrating on the bearish candle formation. Pairs are very winners. Who is the winner here? Pairs are the winner because he is the first. When the market is opened here, he is the early seller. He is also next seller, next seller, next seller, next seller, next seller, next seller. He is the last seller. See the situation. Understand this one. He is the first seller. As soon as market opened, he had sold in the market. He is sitting in the sell position. This person is sitting in the sell position. He is the next seller. He is the next seller. As soon as market started falling down, all these players, they started selling. He is sitting selling position. He is sitting selling position. He is sitting in the selling position. That's why a bearish candle is a form. It is a trending day. It should be a trending day. And here, who is the winner? Definitely, bears are winning. Now we will take one by one situation for the next day where the market is open. Suppose the market is opened, this is flat opening. Market is maybe opened here, market may be opened here. Two scenarios I have clubbed in the same slide. You can understand this is one situation and this is the another situation. This opening is only one side. Maybe it may be opened here, it may be opened here. In the same slide I have taken two scenarios. Maybe if it is opened here, you forget this one for the time being. If it is opened here, you forget the situation here. This opening price is always constant. It is only one opening only. Now we will see the situation. All the previous sellers are in profit. Suppose he sold at 100 rupees here. Now the price is quoting 50 rupees. Now tell me whether he is in profitable or not. He sold at 100. Now the market is 50 rupees. What happened? He gained 50 rupees. He is in profitable. He is the early seller. He is in the profitable scenario. All previous sellers are in profit. The late sellers are in cost to cost or a small loss. These are all the late sellers. For example, first we will take this situation, market, next day market is opened here. Now see, this seller, this is the late seller, whether he is in the profit or he is in cost to cost or he is in loss. Maybe he is into cost to cost because at what price he sold, the same price is here only. Maybe he could have sold at 50 rupees. Now the market is opened at 50 rupees. He is in the cost to cost or a small loss. He might have incurred a small loss. Or will wait for market to move down. Why? Market is in favor of the sellers only. All will wait for market to move down. So all these sellers sitting in the sell side, they are profitable. They will wait market to move down only. Next day it is in favor of the previous day only. Next day market will move in the direction of the previous day because it is in favor of the previous day sellers. It is in favor of the previous day sellers. Market will move down. Suppose if it is opened somewhere here, it is somewhere here. This is the opening price. This is the closing price. Near to the closing price, it will be, you can take this one as a direct selling. Suppose if it is little bit above this closing price, we have to wait for the breakdown and sell in the downside only. Trade in sell side only. Trade in sell side only. We have to trade in the downside only. This is the one situation. Flat opening and near to closing price. Next scenario, same bearish candle. All are sitting on the sell side. Previous day all are sitting in the sell side only. It is a trending day. Bears are the winner for the previous day. All previous sellers are in loss. Why? Suppose he is sold here. Let us say this is the opening price. He sold here, say at 100 rupees. Maybe opened also at 100 rupees. Is cost to cost. Suppose A is the early seller. He is the late seller. See is the situation. He sold here and market, next day market opened a big gap up. He is in the big loss. He is also in 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 big loss. These two or three are a small loss or cost to cost. All previous sellers are in loss. The late sellers are cost to cost or a small loss. They will start booking profit booking. They will start profit booking. It is a very good day, good green day can be seen. Market will move up. Everyone will be in panic and start their loss booking. So market will move upside in this scenario. Trade in buy side only. Don't trade in the sell side. You have to trade in the buy side only. This is the second situation in the sell side. Now third situation, the same one. All early sellers are in profit. So market is opened here. This is the bearish candle. Previous day, this is bearish candle. Market is open here. Now you tell me, market is below the previous day closing. This is the opening, this is the closing. Below the closing price, you tell me whether this late seller, whether he is in the profitable or not. Yes, definitely sold here. Market is now starting here. Definitely he is in profit. He is profit. He is profit. He is profit. All sellers, all early sellers are in profit. Early sellers will start booking profit. Market will move upside to sideways because they are started some of, because the market is in favor of the sellers only. A few sellers, they wanted to book the profit here. When this seller start booking the profit, what he has to do? He has to buy in the market. He has to buy in the market. He has to buy in the market. What happens? Market will move upside. So some of these sellers are profitable. They will wait. They will be in the confusion status. After this move, market will go sideways. If market moves downside, all sellers are in profit. Suppose after a breakdown, after this, market will give a space to come down. Market will little bit come down. What happens? All these sellers are in profit because the market is trading somewhere here. All these sellers are profit or not? All these sellers are in profit. What happens? Market, this market, this price is in favor of the previous day sellers. If market moves downside, all sellers are in profit and market move downside. Trade in sell side only. After this, we have to, if it is a takes little bit high, you have to buy and you have to wait. Market will go sideways. Suppose if it is started downside, you have to trade in sell side only. Trade in and market move downside, trade in downside only. Small correction there. Yes. Understood this one? All these are sitting on sell side. Market moved below the previous day closing price. All are happy. If the market is gives breakout a small downside, we have to be in the sell side. In case market will take some of the sellers will book the profit, it will go little up and make the market sideways. This is the scenario. Next scenario, same scenario, all sellers, red candle. Now market is a big gap down was happened. This is the closing price. A big gap down was happened. All previous sellers are in profit. Yes, definitely all these previous sellers, because these they are sold. Now it has come down. All are in profit. The late sellers start profit booking. The late sellers start profit booking. Market move up a little because they are started booking their profits. When they are sell side, they are buying. It will go up. Then others will also start selling. Trade upside. First target is up to your previous day close. Now we have to keep our target up to here only. Previous day close. This one. First target is up to previous day close. Trade in buy side only, because they will all start booking. All previous sellers are in profit. They start booking the profit. If they are sitting in the sell side, they will start booking profit. They have to buy. Market will go up, but keep the target up to the previous day close, and wait for the price action. Wait for the price action and take your direction after that one. Next scenario. See, this video, I don't know whether up to this time you are watching this video or not. The content is very good. This will take a long time to explain. We are conducting a workshop on all basics to advanced. Join the workshop. I have given my number in this number. You can note 968668515 contact me for your further training program. Offline it is very good to learn all these techniques with practical charts. Look forward for your coming for the training. Next. Now we have seen, first we have seen previous day bullish candle. Again we have seen previous day bearish candle. What is the gap scenario in the gap up, gap down, if it is opened in the upside or downside, all these scenarios we have seen. Now up to here it is okay. Now scenario, now take the scenario of sideways market. Now in the early I have told there are three types of markets. One is bullish market, and another is the bearish market, and another is the sideways market. We have seen the bullish market and bearish market. Now we will see a sideways market. Suppose previous day is the sideways market. Let us take market. This is the market day. It is a sideways market. Sideways market opened in the middle. Now next day market opened in the middle of the previous day. This is the previous day sideways market. Today market is opened in between the previous day market. Market opened in the middle. How to trade for 2 days? We will see that one. This is a sideways market. No one is in the market. Both are same. Here the situation is, if it is market is open in the middle, wait for the breakout of the previous day high, or wait for the breakdown of the previous day low. This is the previous day high, mark previous day low. If it is breakout on the upside, you go on the upside. If it is breaks down on the downside, you have to it has to break down the previous day low, then only you have to take the trade. If it is break out on the upside only, you have to take the in between. Please don't touch the market. You will burn your fingers. Or if you are know the straddle and the strangles, you can operate on. But directional traders, they have to wait for the previous day breakout, previous day high breakout, or previous day low breakdown. In between, please don't trade this market. This is one scenario. The next one is, suppose market sideways market is opened little above the previous day close. What happens? Suppose if the previous day breakout takes directly from here, it has broken previous day high, but it is moving in this direction directly without any sideways movement, it has taken directly, then here we have to buy of the quantity of our investment. If it is passed sometimes here and then take the breakout of the previous day high, it is a good buy. We can pull. Suppose if you have bought here 25% or 50%, other remaining money you can buy here, or you can avoid this stage and take the trade here with full quantity. If you want to take trade here, you have to buy little and remaining amount after this breakout. The same scenario in the downside also. We go to the next. This is the same market scenario. Here what is changing is, suppose the trend is upside trend, previous day 1 or 2 days previous to this trend, it is the upside trend, then market moved in the sideways market. This is today's market, but previous to this there is an uptrend. This we have to notice here. Previous to this day there is an uptrend in the market. Today the market today is the sideways market. Now market is opened above the previous day. Above the previous day, market is opened above the previous day. How to trade? Uptrend and sideways market. Bulls and bears are equal. No one is winner. Trade down and up after breakout or breakdown. Suppose market is here, then sometimes market will come down up to previous day. This portion we have to sell, and here again here market will take the support and market will go in the upside direction. If it is opened here, wait for some time, it will come down and then it will take on the upside. We can trade both the ways. Trade down and up after breakout or breakdown. Next scenario, the same scenario. The change is that this is today's market. Previous day it was a downtrend day. This is the trending and the downtrend and the sideways market. Bulls and bears are different. Trade up after breakout. Suppose this is the situation and market is opened above the previous day high. We have to trade after this breakout only. Market opened here, buy only after breakout. After this breakout only. In the previous, it is an upside. We have made this also and this also, because here it is a previous day is a selling days. Today's market is here. Don't do selling here. After breakout only you have to buy. Trade up after breakout. This is one scenario. Suppose previous to previous day it is a downtrend. Today's is sideways market. Market is opened below the previous day low. Market is opened below the previous day low. Better to avoid directional trade. If it is this is the previous to previous day trend is downtrend. Market moves in the sideways market. Next day market has given opened below the previous day low. We see that market will move in the sideways direction. There is no confirmation of trade in any direction. Better to avoid this kind of market, or we have to options sellers, they have to do sideways market or sell the straddle or strangle in the sideways market. There is no market directions here. There will not be any confirmation. Downtrend sideways market opened below the previous day low, it will be a sideways market only. It is better to avoid such a move, so trading in such a markets. Next, now there is a situation of uptrend, and today previous day market is sideways market. There is a market is opened below the previous day low. If it is open previous day low, it is only sideways. Better to avoid directional trade. There will not be any confirmation trade. Market will move sideways. Only straddle and strangle of options they can take. No directional trade in this situation and the previous situation also. It is market comes down and makes the market in the sideways. If it is opened below the previous day low, it will be sideways market. The same situation in the previous to previous days, it is an uptrend, sideways market, and below the open below the previous day low, it will go no directional. Better to avoid the directional trade, no confirmation trade. Market will move sideways. Dear friends, I have covered from beginning to end of gap trading practical knowledge. Try and back test with the charts. Watch the video again and again to understand the logic. Here the logic is who win and who lose the market. Who win the market and who lose the market. This is based on this one. Who is strong and who is weak in the previous day, and how to trade opposite side of R by seeing the situations of the previous day. Today where the market is open, then we have to trade the call in the market. It will increase the probability of your winning trades. Definitely, after so much of knowledge, if you sit in the beginning of the day, you can view where the market will go for today. If you have this kind of knowledge at the beginning, definitely it will increase the probability of our winning trades. Friends, if you like this content, the presentation, press the like button. If you want to comment on improvement or to be added or content to be revised, you can make the comment. If you like and if you want to share with your friends about these efforts what we have made, share. If so far if you are not subscribed to my channel, please subscribe. Thank you for watching this video. Thank you.